Good evening. Good evening, Vidushi, Vishali, Saikat. Not running notes. I will make the notes. I will provide you. I'll provide the notes. So all those live classes which I have taken, I'm going to make certain notes and I'll provide you. I'll share with you. Okay. Because continuously I'm listening this thing. Ki, sir is not providing. Sir is not providing. So I'll halt other works and I'll provide these notes first. Okay. All right. And I also have shared what I have discussed in the last class. I also have shared that PDF in the group. You can download it from there. I already shared that PDF in the official group or the paid group students. I already shared that thing. Muskan, I have already shared in past. If you need, you can ping me directly there. I'll send you that copy of the syllabus PDF also. Okay, you can ping me there in the Telegram. I'll send you the syllabus PDF again. Though in past I have already shared, I don't think, I don't know why you are not able to find. Please check it there. And if you are not able to find that PDF, let me know. I'll send it to you separately. So we was discussing about these 5 questions. We have started with the simplest question, and I told you that from this part, monetary policy. From this part of monetary policy, question will be most likely be analytical in the nature. Question will be more analytical in the nature, right? Rather than just factual in the nature, you have to compare the monetary policy, or you have to analyze what monetary policy have achieved, what they are not able to achieve, and what should be done to make monetary policy more effective, right? So such kind of the questions you can expect from this topic, though there is also an equal possibility of asking very simple and straightforward question from this topic, like they have asked explain the monetary policy and the type of monetary policy, what are the various instruments of the monetary policy used by the RBI. So under the revision part, we have started our discussion over monetary policy, right? And I also told you how monetary policy was conducted from 1947 to 2016, and from 2016 monetary policy committee came into the existence, right? And since the existence of monetary policy committee, now committee is responsible for what? The committee is responsible for monetary policy formulation, and the execution is done by whom? Execution is done by Reserve Bank of India as per the policy stance taken by the Monetary Policy Committee. So committees consist of 6 members, right? Having the representative of government as well the representative of the RBI. So this committee is going to formulate the monetary policy stance, and as per the stance taken by the monetary policy, in order to execute that stance, RBI will take certain necessary action, right? And for that, RBI uses monetary policy tools, right? And I told you they are of 2 types. One is quantitative and other is qualitative. Under the quantitative tools, they are also known as general tools, and they are known as selective tools, qualitative tools, right? And we was discussing about the quantitative tools, and under the quantitative tools, we already discussed in the last class, CRR, SLR, bank rate, LAF facility under which RBI uses repo rate and reverse repo rate. Fine. Under LAF operation. And recently RBI also introduced long-term repo operation and variable rate repo auctions. Variable rate repo auctions and variable rate reverse repo auction. So these are new innovation in the recent time, especially under the context of COVID generated situation. Under COVID generated situation, liquidity adjustment facility, which was having repo rate and reverse repo rate earlier, now LTRO, variable rate repo auctions, variable rate reverse repo auctions are also there. Fine. Muskan, if you are not able to find the earlier PDF, you can ping me. I'll send out those videos which I have uploaded. I have those PDFs. I will send it to you. So, what is LTRO? Long-term repos. Till the last class, we have discussed the repo and reverse repo and how the reverse repo and repo are going to be used as a tool for monetary policy or liquidity adjustment and for the purpose of containing the inflation, right? So RBI has introduced LTRO. What is LTRO? What is LTRO? That is long-term repo operations, right? Generally, under repo system, banks can borrow money for short term, that is up to 3 months, right? However, in certain cases, that can be extended to 364 days. Under repo, banks can borrow up to 3 months, but in certain cases, it can be extended up to 364 days. But however, RBI has introduced LTRO, long-term repo operations, and under that, RBI right now providing loans from 1 year to up to 3 years. So from 1 year to up to 3 years, RBI is providing long-term repo rate facility. So now banks can borrow from 1 year to up to 3 years under the repo rate facility. Means bank need not to go for what? Bank rates. Bank need not to go for what? Bank rate, because under the bank rate, if bank is borrowing the money for 18 months, if bank is borrowing money from 18 months, bank have to pay the interest rate of 24 months. Because bank rate is charged on annual basis. It is charged on annual basis, but now bank rate is not. Now RBI is providing the long-term repo operations. So if bank is wish to borrow the money for 18 months, 18 months, bank can borrow money from RBI for 18 months, and bank have to pay only the interest rate for 18 months. One, and second thing, if you will compare the bank rates, if you'll compare the bank rates and repo rate. Okay, so repo rate is generally less than bank rate. So one thing, bank have to pay the interest rate for only 18 months, and that interest rate is also going to be low in comparison to what? Bank rate. That means even for the long term, like 1 year to 3 year, RBI has introduced a new facility under which they can borrow the money. Fine. So this is the long term repo operations. What is variable rate repo? Variable rate repo introduced by the RBI. I already explained to you in this thing. So this is RBI circular where they have mentioned about what? Variable rate repo auctions. Variable rate repo auctions, 14 days. Variable rate term repo auctions, tenure is overnight to 13 days. Right. So under variable rate repo operations, RBI provides what? Variable rate repo and reverse repo auction. Auction amount will be decided by the Reserve Bank of India, and a simple auction, either repo or reverse repo, will be conducted based on what? Assessment of the liquidity condition. So what RBI is doing, RBI under the variable rate term repo option, again see this line also, the auction amount will be decided by the Reserve Bank of India on the based on liquidity assessment. So under variable rate, under variable rate repo, under variable rate reverse repo. Under these two operations, RBI is providing 14 days. For 14 days you can borrow, or you can borrow for 1 day to up to 13 day. From 1 day to up to 13 day, you can borrow from RBI, or even RBI can borrow from you. If RBI is conducting variable rate repo, then either 14 day or 1 day to 13 day repo auctions will be conducted based on the liquidity condition, right? Whereas if RBI is conducting variable rate reverse repo, again RBI is going to what? RBI is going to auction government securities either of 14 days, fixed 14 days, or they are going to auction 1 day or 2 day to 3 day to 4 day up to 13th day. That means RBI is right now under variable rate. RBI is adjusting the liquidity in the economy on daily basis. On the daily basis, now they are using the repo operations in order to fix the liquidity on daily basis. Earlier, RBI was using only what? RBI was using only marginal standing facility to adjust daily basis liquidity. But because under the COVID crisis, liquidity situation is more dynamic in the nature, and there is more fluctuation in the economy regarding the liquidity. That's why RBI has started using, apart from MSF, RBI also started using variable rate repo, variable rate reverse repo system, right? So if question is going to be asked you what is the need to introduce, why the VRR or VRRR is introduced, you can mention there the reason is to adjust the liquidity on daily basis. So for adjusting the liquidity on daily basis, we already have MSF operations, right? But you can see that MSF operations generally, MSF, margin standing facility rate, interest rate, is higher than the interest rate of what? Repo. So margin standing facility rate is higher than the interest rate offered under repo. Second thing, individual bank, you can see here, individual bank can draw fund up to excess of SLR plus 2% below the SLR. Means what amount you can borrow. As a bank, you can borrow certain amount only under the MSF facility. So MSF facility, that is marginal standing facility. So it will be better first understand this MSF. First understand this MSF, then it will be easier for you to understand what is the need of VRR or VRRR. What is the need to introduce these variable rate repos? So MSF, marginal standing facility, it was introduced by RBI, right? It was introduced by RBI to adjust overnight liquidity in economy. Adjusting the overnight liquidity situation in the economy. For that purpose, they have introduced what? They have introduced marginal standing facility. Fine. So marginal standing facility have certain limitations. Why? Here, First of all, interest rates. Interest rates are higher than repo, right? Interest rates are higher than repo, and banks can borrow up to certain limit of their SLR or NDTL. Means, first of all, RBI has introduced this facility to adjust overnight liquidity situation, and that is focused on what? Marginal requirement. So if bank have a marginal requirement for overnight, then bank can use what? Then bank can use marginal standing facility. Fine. So for this purpose, RBI has introduced the marginal standing facility for the banks, but the interest rate are slightly higher than the repo rate, generally 100 basis point above to repo rate. So if the repo rate is 4, then marginal standing facility may be 5%. But again, what will be the exact MSF, that is completely based on RBI's assessment of the situation. Maybe it will be 100 basis point above to repo rate, maybe it is 2% above to the repo rate, or it is going to be 50 basis point above to repo rate. So definitely it is going to be above to repo rate, but what will be the exact rate, that is going to be determined by whom? That is going to be determined by the Reserve Bank of India. And if RBI feels that, they can even make it equal. Equal means repo rate and MSF is going to be equal, but it is highly unlikely because marginal standing facility was introduced with a different purpose. Fine. So generally it is a trend, MSF is going to be slightly higher over repo rate. So this facility was introduced by the Reserve Bank of India to adjust overnight liquidity situation. But as you see that there are two restrictions. The interest rates are higher. Interest rates are higher than repo rate. Second, there is a limit. There is a limit of either SLR related limit or NDTL related limit. Right. SLR related limit or NDTL related limit is being there. Fine. So during the COVID year, right? During the COVID times, liquidity have higher fluctuation. Liquidity have a higher fluctuation means in the liquidity condition is fluctuating very high, right? So the normal repo operations and normal MSF operations are insufficient. They were insufficient in order to address the COVID related liquidity situation in the economy. That is why RBI came up with what? Variable rate and variable rate reverse repo and repo operations. So under that, what at one place RBI providing you what? RBI providing you 14 days fixed tenure repo or reverse repo, right? One. Another thing under this facility, what RBI said, under this facility, one is 14 days fixed, right? Another is from 1 day to 13 days. From 1 day to 13 days, repo, reverse repo auction will be executed by the RBI, right? So on the daily basis and fortnightly basis, RBI is going to look over the situation of liquidity in the economy, and on the basis of that, if RBI feel that okay, 3 days repo auction is required or 3 days reverse repo auction is required, then RBI is going to take action accordingly. Earlier, it was only MSF for single day liquidity management. It was only what? It was only which one? It was only marginal standing facility. But now VRR and VRRR is there. So what you are supposed to borrow under MSF, now you can same thing you can borrow under variable rate also. Earlier, the thing which you was borrowing under MSF for a single day liquidity management, now this is available under VRR, variable rate repo. So what is the advantage? Here the interest rate is slightly lower than MSF. So more flexibility for the banks to adjust their liquidity. It was introduced by the Reserve Bank of India during the COVID situation. So LTRO and VRR, VRRR, these are the innovation during the COVID times for the liquidity mismatch management. Okay. Any doubt or question regarding that? Okay. So again, the same thing. I have already covered these topics in a length, in a detail. And if you are not able to get those points here, because I am going the rapid fire right now. So I did those things in a very thorough manner in the live lectures which I conducted, means I have taken in the past. You can go through that lectures. I have dealt each and everything in a length, right? So that's why it's just rapid fire, just quickly reminding each and everything, and then have to focus on the descriptive part. That's why we are doing this thing. Fine. If you are able to find any difficulty, please go through those ones. So the instruments which we have discussed till then now, that is CRR we have discussed, SLR, repo, reverse repo rate we have discussed, and under that means under LAF we have discussed repo rate and reverse repo rate, and also have discussed LTRO and VRR, and we have LAF. And we also have discussed bank rate. And just I explained you margin standing facility also. Fine. Now, two things: open market operations and market stabilization scheme we have to discuss under the quantitative tools. Under the quantitative tools, we have to discuss MSF, MSS, and open market operations. So, if you will see all these facilities, they are only available to whom? Banks, right? But our financial system do have other financial system financial system have financial intermediaries like banks, mutual funds, NBFCs, NBFIs, development financial institutions, insurance companies, and others, right? So if you will see, while managing the monetary policy, means under the monetary policy, the tools which is used by the RBI is dedicated for the banks. There is no as such tool. What we have discussed till then now, there was no as such tool which is going to cater the requirement of all these other intermediaries apart from banks in our financial system. So for catering their requirement in order to adjust the liquidity in entire financial system, RB uses what? Open market operations. Why it is open market? Because it is not exclusively for the bank. These operations under OMO, the operations conducted by the RBI, they are not exclusively for the banks. Under these operations, apart from banks, any other financial intermediary, right, they can also participate in this open market operations. So this is why it is known as open market, whereas other these are the closed market operation, closed market for the banks. Fine. So open market operation. So under the open market operation, OMO, RBI have two kind of what? RBI have two kind of operations, where one is selling operations and other is purchase operation. Selling operation means selling operation of government securities. Here is also of government securities. So if RB will go for selling operation, if RB will go for selling operation, that means RB went to the market. RB went to the market and RB went to the market for the purpose of what? RB went to the market for the purpose of objective is selling of GSES government securities, right? So when RBI is going to sell the government securities, what will be the impact in the economy? Government securities, everybody know that government securities are what? The safest medium of investments. So if RBI is going to offer the government securities in open market like mutual funds, primary dealers, all these things are going to have an opportunity to purchase what? To purchase the government securities. Then definitely what is going to happen? Immediately those market intermediaries who are in this open market operation, they are going to purchase those government securities, and when they are going to purchase those government securities, their liquidity is going to be transferred to whom? RBI. Fine. So banks and other financial intermediaries, they are going to purchase the government securities offered by the Reserve Bank of India. That means the liquidity from system to RBI. So under the selling operation, what will happen? Liquidity will shift from financial system to, even rather than using the term financial system, financial market to RBI. So liquidity will start shifting. That means if RBI want to absorb the liquidity, and or in other words, we can say that there is an excess liquidity in the economy and RBI want to absorb that liquidity, then RBI will use what? Open market operation. When RBI feels that there is only excess liquidity in the banking system, if RBI feels that the excess liquidity in what? Only banking system, then RBI can go for reverse repo auctions. RBI go for what? Reverse repo auctions, and under those reverse repo auctions, RBI is going to offer the government security to banks, and RBI is going to absorb those excess liquidity within the banking system. But if RBI feels that no, not only just a banking system, In fact, entire system have an excess liquidity in the economy. In that case, RBI is going to do what? RBI is going to use the selling operation, and under that selling operation, RBI is going to absorb the excess liquidity from the system. That is the selling operation. Whereas the purchase operation, exactly opposite. Under the purchase operation, RBI have to do what? RBI have to increase the liquidity in the system. In order to increase the liquidity in the system, what RBI is going to do? RBI is going to purchase of GSES, and that effectively is going to do what? Liquidity will be injected in financial market. Right. So maybe they can twist the question, rather than asking in terms of liquidity, they may ask this question in terms of what? Interest rate. They may ask the question in the context of interest rate. What will be the impact on interest rate when RBI is going to go for selling operation or purchase operation? So what will be the impact on the interest rates in the economy? Right. So interest rates in the economy is depend upon the demand and supply of money in the economy. Demand and supply of money in economy. So if the demand of money in the economy is rising, the demand of the money in the economy is rising, but supply of money is limited, then obviously the interest rates are going to what? Increase. Similarly, if demand is getting weaker but supply is persistent, demand is getting weaker, supply is persistent, then in that case interest rates will start falling, right? And falling in the interest rates, the falling in the interest rate may be going to create a situation like situation of liquidity trap like situation. Liquidity trap like situation is going to be created if interest rates are going to be down continuously. So that is why RBI have to maintain the interest rate in the economy as per need of the economy. If economy is feeling like inflation is rising, okay, inflationary rates are rising. So inflationary rates are rising and we have to bring down the inflation. That means whatever the excess liquidity in the system is there, we can absorb that liquidity, right? So if RBI is going to absorb the liquidity, when RBI is going to absorb the liquidity, RBI is going to absorb the liquidity when there is an excess liquidity in the economy, right? If there will be excess liquidity in the economy, only then RBI will intervene and RBI will try to decrease the liquidity which is unnecessary available there. Fine. So liquidity means what? There is an excess amount of money is available. If excess amount of money is available, that means interest rates are already low, and these low interest rates are hurting economy. Why these low interest rates are hurting the economy? Because of the low interest rate, more liquidity is moving towards the financial system. So we must have to check this low interest rate, right? So when RBI will go for inflation control, right? When RBI will go for the inflation control, they are going to use interest rate actually as a tool. So though there are CRR, SLR, LAF, MSF, lot of instruments are there, but all these instruments are going to do what? All these instruments which I have mentioned here, what is the purpose of all those instruments? What is the purpose of all those instruments used by the RBI? It is to what? Interest rates. And through interest rate, RBI is going to check what? Liquidity. And liquidity is going to check on what? Inflation. Right? So RBI uses all these operation in order to adjust the interest rate in the economy. Fine. So maybe they ask this question in context of what? Interest rates. So if the question is like RBI is using purchase operation in the economy. RBI is using purchase operation in the economy. Then what will be the impact on interest rates in the economy? RBI is using what? Purchase operation. Then what will be the impact on interest rates in the economy? They are not asking about what will be the impact on the liquidity. They are not asking what will be the impact on inflation. They are simply asking what will be the impact on interest rates. So we know that under the purchase operation, RBI will go to the market with money, and that money is going to be used by RBI to purchase what? Government securities. And who is going to offer those government securities? Financial market intermediaries like banks, mutual funds, all those who have government securities. They can sell those government securities to RBI, and RBI can give them money. Fine. So in that way, when the purchase operation will be executed by the RBI, that purchase operation is going to start increasing the liquidity in the economy. So liquidity will start increasing. And we know that once the liquidity will start increasing, interest rates will go down. Liquidity starts increasing, interest rates will go down. But remember that will go down until unless what? Liquidity trap like situation. What is liquidity trap situation? Liquidity trap situation is classic example. Under the open market operation, RBI want to increase the liquidity and want to decrease the interest rate. RBI want what? RBI want liquidity should be increased and interest rate should be what? Interest rate should be decreased. For that, RBI started what? Purchase operation. So RBI is purchasing what? RBI is purchasing government securities. Fine. RBI is purchasing the government securities, and that government securities purchasing is increasing the liquidity in the economy. And increased liquidity in the economy, that means interest rates are going to be further decreases. But after certain point of time, interest rates are not going to decrease further. The classic situation of liquidity trap. Right. I already discussed the liquidity trap situation in the past lectures. You can go there in the detail I have mentioned. But just for now, liquidity trap is a situation where the interest rates are going to be low in the economy and they are not going to decrease further. Fine. Whatever the effort is going to be made by the central banks, it is going to be in futile. Interest rate cannot be go below than that in the situation of liquidity trap. Fine. So this is why when you are going for the purchase operation, you have to be very careful. We have to be very careful because you are intended for what? Decreasing the interest rate and increasing the liquidity. Okay, but maybe it will go to where? Liquidity trap like situation. But liquidity trap like situation for country like India, liquidity trap situation is highly impossible kind of the thing, because here liquidity, interest rate, inflation. For example, inflation itself have a lot of externalities. Means in India, inflation is not rising just because of excess liquidity and low interest rates. There are more external factors which are responsible for rise in the inflation and not just the excess liquidity and low interest rate. Right. So whatever the effort you are going to make to absorb the excess liquidity and to manage the interest rate, maybe they are not going to give you the desired result. What I mean to say is RBI is going to take certain actions, right? And what is an objective? To manage and control the inflation. But inflation itself is not dependent on what tools is going to be used by RBI in order to control it, right? So I'm going to discuss this thing further, but just giving the glimpse. Okay, inflation is not a kind of thing which can be controlled through only RBI instruments. And that is also the limitation of monetary policy. Fine. The PDF which I have shared with you in the group, that PDF you can find those limitations. I have mentioned those limitations there. You can use those limitations to answer the question. Okay, so selling and purchase operation, and under those selling and purchase operation, RBI uses what? Selling operation and purchase operation in order to manage the liquidity. Fine. And one more thing regarding open market operation. Regarding open market operation, it is also known as outright selling or outright purchasing. Outright selling and outright purchasing of what? Outright selling of GSES, outright purchasing of GSES. So sometimes students are not able to get why RBI is using the term outright selling and outright purchasing. Can you give me the reason why RBI is using this thing? Can you give me the reason why this term outright selling and outright purchasing is used by the RBI under open market operation? Anyone who want to explain why this term is used, outright selling and outright purchasing, and in what context? Anyone? No answer. Okay. The term means here outright selling. Outright selling and outright purchasing, these terms are used in context of repo and reverse repo. Under repo and reverse repo, for example, under repo, when RBI is going to lend money to banks, it is done under repurchase obligation. That is repurchase obligation government securities. That means RBI is going to lend the money to banks, right? RBI is going to lend money to whom? Banks. RBI is going to lend money to banks. So money will flow from RBI to bank at the time of repo operation, and at the same time bank will transfer its what? Government securities. Actually, bank is selling its government securities to RBI, and against that selling, RBI is giving money to banks. But this selling is not outright selling. That is, selling is a repurchase selling. That means once the tenure of this loan is going to be over, RBI is going to sell it back to whom? Bank, and bank will repay the money. That means the GSES will move back from RBI to bank, and bank is going to pay money back plus interest amount will be paid by bank to RBI. So the government securities are going to be sold and resold, or other words, they are going to be purchased or repurchased. So that's why it is repo, means repurchase obligation. So lending is being done by the Reserve Bank of India under repo operations under the repurchase obligation given by whom? Bank. So bank is getting the money from RBI under the repurchase obligation. So it is not an outright purchase or outright selling, it is a repurchase agreement. Whereas here, once bank is going to, RBI is going to sell the government securities. In this operation, under open market operation, once the government securities is being sold by Reserve Bank of India, or it is going to be purchased by the Reserve Bank of India, then ultimate ownership of this government security is going to be with whom? It is going to be under OMO, the selling operation. Under the selling operation, RBI is going to be the ultimate owner of those government securities. And if RBI is going for outright purchasing of government securities, then whosoever is purchasing those securities, they are going to be the ultimate owner. That is going to be depend on him, right? Here, that is going to be depend on whom? RBI. So after purchasing government securities, RBI went for what? RBI went for purchasing operation of the government securities, and RBI has purchased certain government securities under this operation. Now suppose a bank A sold its government securities to whom? RBI under purchase operation, outright purchase operation. Now the bank's A's government security is with whom? RBI. Now RBI is under no obligation to return it back, unlike what we have seen here in the case of repurchase obligation instrument of repo operations. So that is why the open market operations are also known as outright selling and outright purchasing operations. I hope this thing is clear of regarding outright selling and outright purchase. This outright selling and outright purchase is clear? Why it is known as outright selling and outright purchasing? Now let's move to MSS, Market Stabilization Scheme. Market Stabilization Scheme. We know that India is one of the fastest growing economy. Not right now, even since the beginning of this century, India is regarded as one of the fastest growing economy in the world. So if any economy is known as the fastest growing economy, or it is getting appreciation from all over the world, this country or this country's economy is stable and rising with a very fast pace, then definitely that economy is going to attract a lot of foreign investors. Foreign investors are going to put their money in that economy, that is Indian economy. Fine. So foreign investors, and most of the time, because dollar is considered as world's reserve currency. Dollar is considered as world's reserve currency. What it means that? It means that most of the countries use the dollar. Most of the countries, they use the dollar most of the time whenever they are going to do any transaction apart from their own currency. right? Apart from their own currency. So the domestic currency, the country's currency, it is being used in the domestic operations. Fine. Whereas for the international transactions, the foreign currency have to be used. And when we see that which currency is most of the time used, we found that it is dollar. That is why most of the countries in their foreign currency reserve, they have a hefty amount of dollar as a foreign currency reserve. So because dollar is used for most of the financial transactions all over the world, second thing, most of the countries use dollar as their reserve. That is why this dollar is known as what? Reserve currency of the world. Over the time, Chinese currency is also gaining some momentum over the years, but still it is far away to challenge the dollar's position as what? Dollar's position as a reserve currency of the world. But yes, dollar and against the dollar, Chinese currency is also rising. But right now, we are not going to discuss this issue of dollar and Chinese currency. We are focused here with respect to the Indian case, right? So over the years, means since the India has rises as a rising economy, the status of India was upgraded to what? One of the fastest growing economy. Lot of foreign investment is coming to India in terms of dollar, right? And foreign exchange, kind of the thing that is depend upon what? Demand and supply of currencies in under exchange. So that means if you want to check the exchange rate of rupee and dollar, if we want to find out the exchange rate of rupee and dollar, we have to check what? We have to check demand and supply of rupee, at the same time demand and demand and supply of dollar. So whatever the demand and supply of rupee and whatever the demand and supply of dollar, that is going to determine what? The exchange rate of rupee and dollar. In any case, if rupee's demand is decreasing, right? Rupee's demand is decreasing, or the case for MSS, So India is a rising economy. Lot of foreign investors are putting their money where? They are putting their money in the Indian economy. So what is happening in India at that point of time? Continuously, supply of dollar is rising. The supply of dollar is rising in the Indian economy. So rupees demand and supply is stable, but dollar's supply is continuously rising. So more than demand, the supply is gradually rising and rising. So in that case, maybe what happened, the exchange rate is going to be get impacted. So suppose $1 was 65 rupees, but gradually because of the continuous inflow of dollar in the Indian economy, that is going to create a situation when Indian economy is going to have excessive amount of dollar with respect to the demand of dollar in the Indian economy. Then this exchange rate is going to be what? Get disturbed, and $1 may be slipped to 62 rupees. Means the value of rupee is appreciated. So if the value of rupee is appreciated, earlier it was 65 rupees, now we have to pay only 62 rupees. That means it is going to be a good news for our imports. It is going to be what? Good one. Good one for what? Imports, because we have to pay less rupee in order to get the imported goods. But it is a bad news for whom? It is bad news for exports. It is going to be the bad news for what? Exports. Fine. So what we should do, we should consider is a right thing for our economy, because imports are getting what? Imports are getting cheaper and exports are going to face a lot of difficulty. And we know that our total import is greater than our total export. By this equation, some people feel that this is going to be the right thing, but actually it is a not right thing. It is a bad thing for Indian economy if our imports are higher than export. So some students get confused. Why? The reason is, see, if we look our imports, if we will look our imports, so most of the import which we are doing, that is of energy needs. Energy needs, right? And as Indian economy starts growing, our energy needs are going to be further increased, right? India is an energy deficient country. Somewhere around 85% we are importing for our energy requirement right now, right? So as Indian economy size is going to grow, our import requirements are also going to what? Expand, not going to decrease. So in order to fulfill our import requirements, we must try to expand our what? Exports. We must try to expand our exports. If we this situation is going to be there, then imports will be cheaper, but there will be the issue for what? Exports. Fine. So this is why there is a need to maintain a delicate balance. There is a need to maintain a delicate balance between what? Rupee and dollar, right? But excessive inflow of dollar from the foreign investors is going to disturb that situation. It is going to be what? It is going to disturb the situation of exchange rate. Now this is the situation in front of RBI, where $1 which was earlier of 65 rupees, now it went to where? 62 rupees. Now RBI have to intervene and make it to what? 65 rupees again. In order to intervene in the market, RBI is going to purchase dollar. RBI is going to purchase the dollar from the banks who are getting dollar. So RBI will start absorbing those dollars. RBI is going to absorbing those dollars. So if RBI is going to absorb those excessive dollar which is coming in the economy, right? In economy, excessive dollar supply because of the foreign investors, they are putting their money in the Indian economy. So in order to control that excessive supply of dollar, RBI will start purchasing that dollar from Indian economy. RBI will start purchasing that dollar. But if RBI will start purchasing a dollar, that means RBI must have to provide something. Means if RBI want to purchase the dollar, RBI must have to provide something. And what RBI is going to provide? RBI is going to provide the rupee. The dollar which is excessively available in the Indian markets, that is going to be purchased by the Reserve Bank of India. Okay, so against that purchase of the dollar, RBI is going to give them what? Rupee. And if RBI is going to give them rupee, who have dollar, RBI is going to give them rupee. Then it is going to create another problem. What problem? Excess supply of rupee in economy. Your economy was okay, but dollar starts coming in your economy, right? And that is unnecessarily creating a problem for you in terms of exchange rate. So this dollar have to be absorbed by the Reserve Bank of India. So RBI RBI came into the picture, and this dollar which is coming to the Indian economy, it is going to be absorbed by whom? This dollar is going to be absorbed by the Reserve Bank of India. Right, this dollar which is coming to Indian economy, it will be start absorbing by whom? Reserve Bank of India. But Reserve Bank of India, while purchasing the dollar, RBI will go to increase the rupee. Rupee is going to increase, and this increase in the rupee supply, it is going to further create a problem for what? Inflation, right? Inflation. So in order to control that kind of the inflation which is coming in the economy because of foreign exchange related troubles, this is foreign exchange related trouble is there, and that inflation is rising, then RBI will do what? Then in that case, RBI, Reserve Bank of India, is going to issue government securities to absorb this excess rupee. So what happened? Dollar came to Indian economy. Dollar came to Indian economy, and this dollar is disturbing what? Exchange rate. So in order to maintain exchange rate, RBI intervened and purchased that dollar, right? But RBI has put excessive rupee in the economy. Now RBI is going to issue what? RBI is going to issue government securities. RBI is going to issue that government securities so that whatever the money is poured by the Reserve Bank of India in order to purchase that dollar, that will be soaked by the Reserve Bank of India. But there is a catch. Government security is always bear an interest. If RBI is going to go to the market, then government securities bears an interest in the form of discount. That means if RBI, suppose RBI is going to purchase the dollar worth 10,000 crores, RBI purchased dollar worth 10,000 crore. That means that 10,000 crore rupees is put by the Reserve Bank of India in Indian economy. So RBI purchased the dollar from the Indian economy, and against that purchase, RBI have put 10,000 crore rupees in the Indian economy. Now RBI have to absorb this 10,000 crore. So RBI have to issue what? Government securities. But government securities bear what? Interest rate in terms of what? Discount. So RBI have to pay the interest rate. But the question is why RBI will pay the interest rate? RBI is not going to pay the interest rate. It is a problem for the government, right? So that is why in order to solve this entire problem, RBI and Government of India, RBI and Government of India went for an agreement and Market Stabilization Fund. Market Stabilization Fund is created. Under this Market Stabilization Fund, some money is here. Suppose that this fund is of 50,000 crore rupees, right? This fund is of 50,000 crore rupees, and RBI can use this fund in order to absorb this excess rupee. So RBI can use this market stabilization fund in order to what? In order to absorb this excess liquidity. And this excess liquidity came because of what? Excess dollar. So RBI will use this fund, and RBI is going to issue the government securities. Right. So this fund is of how much? 50,000 crore rupees, and RBI issued government securities with the worth of 10,000 crore rupees from this fund. So now this fund minus 10,000 crore, it is left with how much? 40,000 crore rupees is still left in which account? 40,000 crore rupees is still left in Market Stabilization Fund. That 10,000 crore rupees government securities issued by the Reserve Bank of India, and it will go to the economy, and RB will absorb this 10,000 crore. Now the question is, who is going to pay the interest? It is Government of India is going to pay the interest as per the agreement between RBI and Government of India. Means dollar increase in the Indian economy, RB is going to absorb it. RB is going to absorb it. Then while absorbing, RB is putting what? Rupee. That rupee is going to be taken by whom? That rupee is going to be sucked by whom? Reserve Bank of India, and RB is going to give the government securities. Government is saying that ki, okay, you can issue the government securities, whatever the interest will be there, we will pay it. We will pay that interest. Fine. So this fund is created, Market Stabilization Fund, and this fund is dedicatedly going to be used for the purpose of what? That fund is dedicatedly going to be used for the purpose of absorbing the liquidity which is in the economy because of exchange rate related issues, right? Those people those people who are not able to understand, they can understand with the example of right now lemon. Lemons are getting very costly, and lot of social media and other platform, lemon is in the buzz, right? So suppose that government want to stabilize the price of lemon. How government can do that, right? Government can create a fund worth, suppose, 50 crores, right? Government has created a fund worth 50 crore, and this fund is going to use by the government in order to purchase what? Only lemon. So only lemon purchase, we are going to use this fund created by whom? Created by the government. Now government use this fund 50 crore rupees. Out of this 50 crore rupees, government used 10 crore rupees and purchase what? Lemon. Right now, before government is going to purchase the lemon, right now the price of lemon, suppose that 250 gram is costing somewhere around 50 rupees. Suppose, okay, 250 gram is costing somewhere around 50 rupees of lemon. For getting 250 gram lemon, you have to pay 50 rupees. Generally, this price is somewhere around 20 rupees, but right now it is somewhere around 50 rupees. So government saw that there is an unnecessary price rise. So what government did? Government used their 10 crore rupees and they purchased lemon. And government started selling lemon through government agency. Government started selling this lemon at the price of 20 rupees. Government started selling this lemon, 250 gram lemon, at the price of 20 rupees, whereas the other sellers are selling at the price of 50 rupees. So when government is going to use this fund and government is going to sell the lemon at the price of 20 rupees, automatically those people who are selling at higher price, they will also forced to sell at how much? 20 rupees, right? And government is also selling at what? 20 rupees. So when government is going to sell that lemon at the price of 20 rupees and money is going to be received by the government, that money is going back again where? In this fund. So this fund is a dedicated fund to use for the purpose of stabilization of the price of lemon in India. Similarly, Market Stabilization Fund is a dedicated fund which is there, which is going to be used for the purpose of stabilizing any dollar related, exchange rate related inflationary issue in India. Right? Sir, if overall exports is higher than import, then it is necessary to balance the rupee dollar, means just need RBI to absorb the dollar. Yes, yes, exports are rising. Suppose that your total import is now less than total export. your import is less than total export. Total exports are higher than total imports. So how much higher they are? How much higher they are? Suppose that our imports is of having $6 billion, $600 billion, and our export reach to $650 billion. That means we are going to have a surplus of $50 billion. Now the question is, we want to make it only $50 billion, or we want to make it more? In order to make it more, we have to further encourage our exporters, right? And the extra income you are going to generate, so that is going to strengthen your economy. So always every government is more focused towards what? Export, export, and export. So it is the official policy of all the governments all over the world in order to increase their export, in order to control or means make their economy strong, right? But yes, if that export is also going to create a problem in the rupee and exchange rate, rupee and dollar exchange rate, then RBI will again intervene. RBI, how RBI can how RBI can issue? RBI cannot issue. Means it's a central bank of India, na. RBI is a central bank of India. RBI can issue the rupee denomination. For issuing the dollar denomination, you need you are not central bank of USA, na. You cannot issue that. You cannot issue that because you are not a central bank of USA. You are Indian central bank, right? So and see, if RBI is going to issue this rupee denomination bond, then who is taking the guarantee? Government of India is taking the guarantee. Government of India Can Government of India take a guarantee on government security which is issued on dollar? If government is also taking the responsibility on the government securities which is issued in dollar, that means by default, dollar is also your currency, or you can say it's now a what? Legal tender. So you have given the equal status to dollar. What you have status given, you have your rupee in your country. So that is that is not possible. That is not possible. It is going to give very wrong message to international community, especially the business community. That means government of India is weak, and RBI is also incapable of resolving all those issues. So such kind of the possibility is not there. Clear? सो वृषाली saying that कि लेमन हमारे लेमन की खेती होने के ओके आजकल हमारे घर में ही लेमन नहीं है. So Vishali, once you will get the lemon, send it to my address also. If you have means घर पे अगर लेमन की खेती होती है तो send for us also. Okay, I will send my address. Anyone who have access to genuine Alfonso mango can also contact me. I'm ready to pay for those original, but original one, because many times I got cheated. They asked me ki they are selling original Alfonsos, but they always sold what they are not original ones. So if anyone who have this thing, please let me know. I'm ready to pay. Okay, now so we have discussed all those instruments starting from CRR to MSS. We have discussed all those instruments. They are what? Quantitative instruments. Apart from the quantitative instruments, there are qualitative instruments. And I told you when I began the discussion, I told you credit control, moral suasion, these are the instruments where RBI do not increase the quantity of money supply in the economy, but RBI try to control the flow by selective credit control, by moral suasion. What is moral suasion, by the way? What is moral suasion? सीटी एक्सप्रेस सर ओरिजिनल लंगड़ा आम तो है हमारे यहाँ. अच्छा, कांटेक्ट मी ओवर दैट टेलीग्राम. I love to have that lagda also. Lagda. But before that, let me know what is the moral suasion. Convincing. Nistha is saying that moral suasion means convincing. Convincing for what? Mangoes. Like I'm trying to use this moral suasion. Ki please let me know. So Nishtha's answer is close to what she want to say. I hope she want to say the same thing which I'm going to explain. Under the moral suasion, RBI is going to have a meeting with the banks, with their higher management. RBI is going to fix certain meetings through speech or through occasional papers, or somewhere RBI is going to write an article. RBI governor or deputy governor is going to stress on those things, media conference, all these things. Means in all those things, RBI is going to pursue what they want to give to the people. Actually, RBI have to control what? Inflation. And inflation with whom? People. RBI do not intervene directly. RBI intervene through whom? Banks and other financial intermediaries. Other financial intermediaries, and they are going to be participate in the economy. So RBI took certain decisions with respect to what? With respect to inflation, and that decisions are implemented on banks and other financial intermediaries. Now what RBI want ki the way RBI has took the action, in the similar manner bank and other financial intermediary should reciprocate those things to whom? Those things to economy, right? Economy. So this is what we say is, the term is known as monetary policy, monetary policy transmission. It is known as monetary policy transmission, right? So the transmission of monetary policy is also one of the issue why monetary policy is not too much effective or very much effective in India, because the transmission is not very smooth. It is having a lot of issues. Banks are not reciprocating those things which is pushed by the Reserve Bank of India on the banks in order to put it those things in the financial system, right? So that is why monetary policy transmission is an issue. In order to make monetary policy transmission, RBI uses moral suasion. It tried to convince banks and other financial intermediaries like you have bigger responsibility. You are not just going to make a profit, or you are not just doing the business. Actually, being as a business entity here, you have more important responsibilities to be executed by you. because you are one of the most important constituent of our financial system. So the policy actions we have taken, you must try to execute those policy actions from your end in order to make it effective, right? So this, in this way, RB uses various meetings or conference or speeches, or sometimes directly they are going to write a letter to banks ki why you are not doing that thing. We have asked you but you are not executing those things. So in this way they are going to write a letter also to banks management directly. And still if monetary policy transmission is not working, then RB can also go for what? Direct action. RB can also take certain direct action in order to resolve those issues. Right. So direct action is also there. Under that direct action, RB is going to write a letter. Like in the moral suasion, they wrote the letter, but here this time when they are going to write a letter, they are going to mention that ki why we should not penalize you, why we should not take action against you. So bank have to provide an explanation ki why RB should not take action against them. Right. So it is more trying to persuade them with the use of mild force also. And if bank is still not doing those things, then RB can go for further action like putting some independent director in the bank's management board in order to oversee the working of the board of bank. Or RB can even penalize also, and in the worst case RB can prohibit that bank to execute certain function or maybe the entire function. So all these powers rest with whom? Reserve Bank of India, right? All these powers hold with the Reserve Bank of India. So in this way, RBI uses quantitative and qualitative monetary policy tools, right? So this is what about the moral suasion and direct action. Clear? So what it is, how it is executed, types of monetary policy and monetary policy tools. All this we have already discussed, right? All these things we have already discussed. Now we have to focus our discussion towards the limitation and how that can be solved, right? So in India, in India, though I already have given that PDF in the group, right? That PDF already contains those limitations of monetary policy. They are also there, right? You can go through and it will be very helpful for you in order to frame your answer. But one thing, since 2016, since 2016, RBI is what? RBI is inflation targeting central bank. The main role of RBI under the monetary policy is what? It is to contain the inflation, right? It is contain. the inflation. So what happens in an economy? In any economy, there is always a tendency of rise economy like Indian economy, developing economy. So developing economy, Indian economy is a developing economy, and any developing economy needs more money to fulfill its development requirements, right? They need money to fulfill their development requirements. That is why economy is bound to have high, or better than high, bound to have rising inflation like situation, right? That is going to be definitely, because for the developing economy they need more money in order to fulfill their developing requirements. That means they are going to face this issue, right? They are going to face this issue, or they are going to face this situation. Fine. So for India, from 2016, RBI is what? RBI is inflation targeting central bank. RBI is what? RBI is inflation targeting central bank. That means RBI have to control the inflation. And I just told you कि inflation is bound to rise. Inflation is bound to rise in order to what? Requirement, in order to fulfill the requirement of developing economy, we have to put more money in the economy, right? So now the dilemma with the RBI is what? The dilemma with RBI, the problem with the RBI. Problem with the RBI in this context. What is the problem with RBI in this context? At one end, RBI have to control inflation under monetary policy committee, monetary policy under framework, under monetary policy framework. But at the same time, RBI also works as a bank to government of India and manages and arrange borrowings for borrowings for government of India, right? So RBI is managing and providing borrowings to the government of India. So RBI is providing money to whom? GOI. RBI is providing money to whom? GOI, Government of India, and government is going to spend that money in Indian economy. Right? Government is going to spend that money in the Indian economy. Then growth is going to increase. Growth is going to increase, but at the same time, growth will increase. But apart from growth, inflation is going to increase. So what will happen when RBI is going to provide a money to Government of India? Government of India is going to spend that money in the Indian economy, and that is going to what? Growth is going to increase, and inflation is also going to increase because of the rise of supply of money in the economy. And at the same time, you also assign the duty to RBI to control inflation. So this is the contradiction. The contradiction is what? Contradiction in the RBI's work is the contradiction in the RBI's work is at the same time Reserve Bank of India is providing money, right? Money, and that money is also going to create a problem related to inflation. So RBI is responsible for the money supply, and RBI is also responsible for the inflationary related issues. Fine. So there is a contradiction or conflict of interest. The conflict of interest in the RBI is functioning. At a point of time, RBI is providing the money supply to the government of India, and government is going to spend that money in the economy. That money is going to create an inflation. Now again, you are going to push the Reserve Bank of India. No, you have to control what? Inflation. Right. So first RBI have to provide the money, then RBI have to regulate the same money. Fine. So at the same instance, you have to think about both. At the same instance, you have to think about both regarding a balanced growth as well as control the inflation. So this is the duality of work with the contradiction. So duality of work with contradiction, right? Duality of the work with the contradiction is going to what? Is going to create a problem for you. Is going to create a problem for you. So now it is very important for RBI and Government of India to seriously think about public debt management agency, PDMA. Public Debt Management Agency, which can take the responsibility of what? Debt management, and RBI can completely focus on what? RBI can completely focus on the inflation control, right? So in that way, we can say that now RBI, what we can do, the way forward. I discuss what are the limitations. What are the limitations? The way forward is like that RBI must focus on inflation related targets, whereas the other things is going to be given to government. Fine. So in this way, you can answer those questions like this one. What makes monetary policy ineffective even in the shorter run? Right, this question. Critically examine the role of Reserve Bank of India maintaining the financial stability under the new regime of monetary system. Right. So these kind of the questions which are asked here, you can answer these questions by presenting these arguments which I just let you know in this discussion. Ki what Reserve Bank of India have a duality of the work. So either government have to give more flexibility in the working of the Reserve Bank of India. Right? Government have to make RBI more independent in the policy making. Right now, there is a influence of the government, though it is not very much influence, but RBI need more independence in order to perform these dual tasks. RBI need more autonomy with respect to what? With respect to government's influence in the functioning of Reserve Bank of India. For example, right now the bank's governor is a former finance secretary, former official of the government of India. So while the selection process of the governor, it is have to be an independent person who must not be coming from the government's background. Otherwise, the person who is coming from the government's background, maybe he is going to be more lenient towards the government policy, and RBI's functioning is not going to be proper. Why? Because RBI have to perform both role, controlling the inflation and providing the money to the government of India through the borrowings, right? So if a person who is a governor, he is coming from the government's influence, maybe he is going to focus on this part more, on this part more rather than this part. So in that case, monetary policy is going to be remain ineffective. So central bank's independence is highly required in order to execute those complex functioning and working of the Reserve Bank of India, right? So in that way, you can answer those more complicated and analytical questions in your answer, right? I have given you the analysis, and I have presented the structure and diagram. I will share this structure and diagram or the annotation of this PDF. I will share with you in the group immediately after the class, this class. And even from right now, whatever I am going to annotate here, I am going to share on the daily basis. Right? I am going to share this thing on daily basis. Plus, whatever the possibility of providing the printed form of answers, I will also provide. So in that way, I hope I'll try to match your expectation with me, because I'm feeling like that ki there is too much expectation and I'm not able to fulfill those expectation, and that is not going to make me means okay. So I will try for that. I will start sharing these PDF on regular basis of today. Every day I will share those PDFs. So sometimes if you want to watch the lecture again, you can go to that lecture and you will see those annotations going on. It will be more easier for you to do the revision work. One thing. Another thing, as I made a commitment, I am going to provide all those PDF of all previous classes within the next 10 days. I'll going to provide it, right? At any cost, I will provide you. And this is one I'm also going to share with you. So you can attempt those questions. You can attempt all those questions. If you want, you can send your answer to me. If I'll get the time, I will see it. I'm not making this promise, but I'll try to see those answers and I'll give you the feedback if it is possible. Means this is kind of thing. I'll check if it is possible, then I'll give you the feedback. But at least you can write so that you can do some practice, right? At least you can write and do your practice, right? And once you are going to clear the part 1 and you are going to go for the level 2, then in that case I will also check the answers properly and I'll give you more rigorous feedback, right? But for practice purpose, you can go for it, and just to maintain the accountability, you can send it to me also. Key means how you are going to accountable yourself. You can send it to me on the Telegram. If I'll get the time, I'll definitely check it. Okay. Sir, like balancing internal issues like inflation, are the central bank of the countries have any global responsibilities? No, no. Central banks like for this inflation, and they basically maintain. Yes, in the context of global responsibility, what global responsibility they do have as a central bank, the global responsibility is to prevent money laundering and financial terrorism, right? So make your system clean in such a manner so that your system cannot be misused by the miscreants like terrorists and hackers and other uh, idiot people or those people who are not good people. So you have to make your financial system more vibrant and more effective, right? In that context you have a global responsibility, right, to prevent the money laundering and to prevent financial terror financing. One responsibility you have to pay. Another responsibility you have to play at the global level: make your financial system so vibrant and less prone to risk. So in that case, if your financial system is having a capability to absorb any risk, then your economy is going to support the global economy. Because what happened in 2007 8 or even in the Asian financial crisis, so crisis happened at one part of the world and it has created a problem for entire world. So as a central bank you have a responsibility to make your system better so that that better system will provide the financial stability all over the world. So in that context you have this global responsibility. This is thing you can write. I hope you got this point, Aditya. You got this point? Yes, Rushali. This Sunday I will take the current affairs session. This Sunday I will take the current affairs session. Okay. Today's Friday, Saturday, and Sunday. Sunday I will take, not in the evening, maybe in morning or afternoon. I will take the session on this current affairs. So I discuss all the aspects of monetary policy and related issues, right? Provided some content and another content I'm also going to share with you. What you have to do: read those content properly, okay, and attempt your question descriptive questions accordingly. If you face any difficulty, then let me know. So, monetary policy topic, which we have started yesterday for the descriptive and the revision purpose, is over. Tomorrow, I will take questions related to budgeting. What questions they have asked related to budgeting, and means tomorrow I will take questions on budget and fiscal policy. This is going to be the tomorrow's topic. So from tomorrow onwards, budget and fiscal policy related questions, model answer and revision will be there. Which month? Vishali, let me check. Let me check. Then I'll let you know tomorrow. Tomorrow I'll let you know. Okay. So any other question, or should I wind up this session? If you have any other question, please let me know, or I will wind up the session. Okay then, everyone. Good night. See you tomorrow at 8:30. Thank you.